Hello and welcome to Pro Trader Strategies Market Commentary for Monday, May the 15th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Mondays, generally speaking, we don't have a whole lot of economic data, but today we got some pretty key economic data in the form of Empire State Manufacturing Index came in at -1 versus the expected increase of 7.2. That is a pretty major pullback in the manufacturing sector for the New York region. And then we also got National Association of Home Builders came in slightly higher than expected at 70 versus 68. So that one a little bit better than what we thought was going to come out. And then we have a couple of people speaking throughout the day. We also had the Prime Minister May speaking, so it was from Great Britain. But at the end of the day, that Empire State Manufacturing Index was pretty lame, if you will, for lack of a better word. And we'll go into that during the talk about these different markets. But we got crude oil up $1.28 today. Pretty huge spike again today, and right back to the point of control, the value area where the most time and volume has been spent. Remember, this value area for the volume was a little bit higher. It has since moved back down inside of the bell curve distribution here, right here at this level, at right around the $50 mark, if you will. Still watching the 9-day and the 50-day and the 200-day moving average. Once they cross over, that is going to be a signal of bearish sentiment to the downside. So it's really got to get back above 50 in order to keep that from happening at this point. So that's going to be a pretty key metric to watch in the charts here. So right now, stuck in the mud. Could conceivably start trading sideways for a little bit. We are still seeing lower lows, lower highs. It's going to really have to rally hard to get up above 55 in order to kind of break that bearish sentiment to the downside in crude oil. And if manufacturing continues to show up as lackluster, that's going to be bearish for crude oil. We've got the gold futures up about $3 on the day. Not a whole lot to see here. Gold just, I don't really see gold really spiking anytime in the near future unless we start seeing a real big pullback in the equities. We are starting to see VIX push a little bit higher, albeit it at very low lows for all intents and purposes, but it was spiking a little bit earlier this morning, but not hugely, just in the green, I guess, is about all I could say. I guess I shouldn't say spike. I bump in the VIX. Anyway, the bonds down on the day just slightly, but again, we've talked about this. I almost don't even need to talk about this for some time, but at the end of the day, this is kind of where the markets put value in the bonds with the Fed already predicting higher interest rates. It's priced into the bonds. Dow Jones Industrial Average up almost 100 points on the day. Value area high, or sorry, point of control, I should say, for the most time and volume. Actually, the volume is moved up here, the time down here, but the time is probably going to move up here because we've been spending a lot of time up here. I wouldn't be surprised to see that move in the next few days if we continue to trend sideways here. But the Dow up quite nicely today, as with the NASDAQ again producing another historical high, up only almost 8 points on the day right now, but really continuing to trudge higher. E-mini S&P is having a nice big day, up 11, or up a nice decent day. Still stuck in this range that we've been talking about, sideways trend right here between 2375 and 2400. So 2375, 25 tick range for the most part is not a very massive range at all, especially for the E-mini S&Ps that could move that in one day. But it is going to act as resistance when we get closer to that 2400 area, as we are just off of that. That's acting as resistance, just a psychological level for the most part. If we look at it on the intraday chart, printing 2400 right now, but as you can see, we kind of bounced up in that area, just broke above it, and that's immediately when we started seeing some bearish sentiment in there. So a line in the sand that is more psychological than anything. Probably going to want to try and get up there and test that all-time high we talked about that happened in an overnight session. If we can take out this overnight session by clicking it off, we're going to see that we have encompassed a new historical high in the E-mini S&Ps without that overnight session. But it's going to want to try and get up there and print that 2404 would be a mark that I think would be a target for the E-mini S&Ps, just to get that full range printed within the day session. So 2404 would be a place that I think that we could easily see today. Even if we were to sell off, I think they're going to try and jam it up there to get to that point. Anyway, on to the overall markets that I've been trading. If you remember, I just put on this EEM, which is the emerging market ETF, and I did it when we saw this doji up here. And usually when we see that happen at the top of a range, there's a good likelihood we could see a bit of a pullback. And I got in a little bit early. I didn't wait for it to get confirmed. The real, if you aren't as aggressive as me, you are doing much better than I did on EEM. But usually you wait for that to get confirmed. Sometimes if I, want to be aggressive, which I did, I stepped out and put on a put spread in there. And once it wasn't confirmed, as of Friday, rallied up and settled above that doji. It is no longer a valid setup, and could have covered it on Friday, but waited again until today, covered it to get out. So with EEM, I had on the July 42.5, 38.5 put spread in there, and I originally paid a debit of $1 and paid $1.70 for that, I believe. And then I got out for $1.40, so lost about 30 cents on that particular trade there. Then on to the next trade that I did was Apple. I saw a lot of news over the weekend, people talking about Apple being the first $1 trillion company, could happen within this quarter. So I decided, you know what, if they're going to start talking about this, that's going to be a lot of people that haven't been in Apple. I wanted to get in a little early, decided with this pullback was a good time to get in, and decided to put on a synthetic long in here. So I went into the January contract and bought the 155 calls and sold the 155 puts to create that synthetic long position. It's going to act just like me going out and buying Apple at $155. Actually, since I paid 70 cents, it's going to be like I paid $155.70 for that trade, and I did get it when it was a little bit higher. A lot of people coming in and pumping up those calls for the same reason that I did, so I wasn't able to get such a great price break on it. But I decided I'm going to be in this for a while, so I would let it ride out a little bit, a few pennies here and there amongst friends, right? So I paid up a little bit for this, and it was before we started really seeing the pullback. But anyway, into Apple, just like I talked about in the webinar on Friday on how to set up a synthetic long. I usually wait for a bit of a pullback on something like this, but I went with the news, buy the news and sell the fact kind of thing, and hopefully get a little bit of a pop in here with Apple. All right, that's about all I got for you guys today, other than if you can't take that, Take it easy.